Let's continue to talk about the bigger picture and some investing strategies for you as well that you want to consider. Joining me right now, David Stryzewski is with us, CEO of Sound Planning Group. Thank you for being here.
Pleasure to be with you.
So you have some picks and things, but I am curious about how you feel overall in the market. We just had 4 weeks of gains, right? We have about 5 weeks left of trading. Your thoughts on what we could see?
Well, I think there's no question that as we started this year out, we were looking at, going into recession. Everyone was saying it. And so our thesis has been that the second part of the year is going to be a little weaker than the first part of the year. And I think that we're getting to a place right now where we're beginning to see these debt loads come. We're beginning to see, Moody's now looking at even downgrading the United States as a result of some of this stuff. These are big macro themes that do not spell a great economy, a great opportunity for things to continue to grow right now. And so, hey, I love that the market's rallying. I vote it goes up forever.
Right.
Here's reality, though. What goes up ultimately comes down. We ended the longest bull market in the world's history, and what ended it was that Jerome Powell flipped the switch there on rates, and that caused a 40-year trend to change. And so that 40-year trend where now rates are higher makes things so much more expensive, specifically real estate more expensive. Our PE ratios look a lot different when we can't borrow in quite the same way right now.
Do you expect a cut?
Well, of course, I think that there's going to be a cut. I mean, they can't leave it this elevated forever. However, they've said higher for longer. So I don't think that we need to be holding our breath for a cut at this moment. I think that this is a time where we need to be a little bit more conservative in that measure, and we need to say, okay, I vote that the market goes up. I vote that there's a cut that's going to occur. But what would ultimately be as a result of that cut? Well, maybe the economy goes into a severe recession or depression. Maybe it's our housing market that's not moving right now. There's no mortgages that are moving.
You are worried about a few things. I mean,
very significantly.
What do you say for the folks who say, oh, I missed out, tech did so incredibly well in 2023. What do you tell those folks who feel like they may have missed out?
Yeah, well, ultimately, the market goes up and the market goes down. And I think that the PE ratios of where we are right now, yes, they're highly concentrated into about 7 names right now, including most of the S&P 500. But for those that have missed out, I'd say this, what got us here is not likely going to be what continues to cause things to go forward. And so my personal belief is that we're going to see commodities really build and go up because, whether it's copper and uranium, which are key to building, a more electrified world here in the future, whether we're looking at gold and silver, which I know we're going to get into, and I've been just real big on these for the last few years. There's a lot of opportunities, I believe, that are here today that I think will be a lot more higher price in the future.
Well, you're looking at GDX, the ETF, and that, for example, just this month is up over 11%. Is there still room there for the upside potential?
Absolutely. As the market has grown so significantly this year, the gold miners, metal miners have not grown nearly proportionately. And if you look at the price to earnings ratio, in other words, what are you paying for what are you receiving? They're in really, really good shape right now in comparison. Additionally, when gold continues to steepen like this, those companies have mining rights. There's real value in the ground for the things that they're going to be going after, and there's going to be a consumer that wants to buy it, especially when we're looking at central banks picking up like 1,200 tons of it annually right now. So, I think that's an important deal.
And silver you like too?
Okay, so I'm a really big fan of silver. And if we look at the gold to silver ratio right now, it's looking at about 82 to 1. It was 87 to 1 about 12 days ago, 82 to 1 right now. They can actually produce 9 ounces of silver for every 1 ounce of gold. So in my opinion, I believe silver is going to grow and go a lot further actually than gold will, although gold's going to go significantly up in price.
All right. As I look at, for example, GC, just looking at gold itself, 6 months up 4%, year to date up 13%. We certainly see this breakout today at 20.41 a troy ounce. And then you keep in the commodities, but you turn your attention over to oil as we do await to hear more from OPEC Plus on Thursday. They've had some infighting. Where do you think oil is headed and why? Okay.
Oil is definitely going up, and here's my reasoning for that thinking. Well, number one, we've got a conflict here with the Russia-Ukraine situation. I don't know. It's not really going very well. Then we've got this new Hamas thing in Israel, and so if that gets out into the Saudi Arabia experience, that's going to be a big problem. Now, the Saudis just joined up with the BRICS, and so this is probably the end of the petrodollar. And I realize that's a very big statement to make, but they just joined the BRICS here as of January the 1st. It becomes official. And they just inked a deal last week with China in being able to trade back and forth. So they're calling it the petro yuan, while they're also looking at doing this BRICS pay dollar that's coming out here too. So I think oil is going to be going up. I think that the U.S. dollar is going to be challenged here as the world continues to move forward as well.
And with these two commodity ETFs, GDX and XLE, what kind of upside potential do you see? Near term, long term? Are you hoping for 10% over a certain period of time? What?
No, I'm thinking that we're looking at probably 100% gains in these specific indexes here over the next 12 to 24 months.
Oh, you're expecting some big moves.
The world economy is shifting and changing right now. We've not seen the capitulation moment. Things have just more or less been kind of doing the soft landing and being held together. But I think that we're going to get to a very difficult time specifically with banking. You know, what was 2022, we realized inflation. 23, we're realizing the real estate issue right now and the big buildings that are happening. And the challenges that we're seeing there. I think in 2024, it's going to be more of the banking crisis. And in this regard, with interest rates going so high, the banks not having as much cash, you know, March was when we had this big debacle. I anticipate March again in 2024 is going to once again have more challenges in banking, specifically in those local regionals. I just don't see how they can remain buoyant.
Right. Wow. So that's sounding a lot like a black swan event when you're talking about doubling on these commodities. And then there's just good old Costco.
Yeah.
Why did this one jump out at you today?
So here's why I like Costco. Number one, I'm from Kirkland, so that's the hometown of Costco, Kirkland signature.
All right.
Okay, but when we look at it from this standpoint, you know, there's a lot of rips right now in America's fabric. You know, this smash and grab thing that's taking place, all the theft that's going on right now. The one thing about Costco is every member that goes in the store is a member. They're known. You got to get your ID checked and your receipt checked at the end. That leans out what they're calling shrinkage, the theft part of what we're seeing in retail right now. Additionally, I think that Costco does really well when recessionary times get hard. People stop going to the restaurants as much, and what do? Well, hey, they go over to Costco. They buy more items there, and I think that Costco's positioned really well to be, you know, taking advantage of the fact that they're working with upper middle class people who happen to have a little bit more discretionary income than those who, you know, maybe have lost some of that here over the last couple of years.
I never really thought about that. In order to shop in Costco, you have to be a member?
Got to be a member.
Oh, so that really filters out pretty much everybody.
And that membership is like 97-98% renewal every year. It's 100% profit. They could increase their profit line so easily just by increasing that rate.
Yeah, and look, it's been at the highest levels since April of 2022. It's really doing pretty well these days. Good to see you.
Great to see you as well.
David Stryzewski, thank you so much, of the Sound Planning Group. Thank you. Up next, we're talking